There are just about 7 million customers, small sample size, who are a part of N26. Hands up if you are one of those 7 million people who are a customer of N26. Amazing. All right. So the next person I'm bringing to the stage is actually the country lead here in Austria at N26, which, of course, is in 24 markets now. They are completely reinventing what banking looks like. And this is, of course, in an industry that is heavily regulated. So I think it's time to unpack what it looks like to scale so dramatically, especially with the added pressures, stresses of those sorts of regulations. So without further ado, please give a warm 15 seconds round of applause to Christian from N26.
Well, hi everyone, and thanks for the introduction, Shane. Actually, I would like to kick off my talk with a little question for you. Like, who of you has been inside a bank branch this year already? And I mean actually inside, not just to the ATM in front to get some cash. Okay, I see a couple of hands here actually, not too many over there. That's what I expected basically. One of the reasons why N26 was founded is maybe summarized in that quote out of a study. Personally, I think it's vastly exaggerated. I would visit any bank branch in the world to avoid going to the dentist. But I think what is true in there is that customer expectations in like digital customer experience have just dramatically changed. So back in 2015, when N26 was launched, actually, people were already listening to the music on Spotify, were communicating on WhatsApp, and banks still discussed basically whether banking will happen inside a branch or on a desktop computer. But they were pretty sure it's not going to happen on a smartphone because it's too small, not trustworthy enough. And there was just this growing opportunity for like a digital player like N26 and others actually to enter that field back then. And what we are trying to the different is that we really try to have a new approach to banking. So basically, we didn't need to digitize like old physical traditional processes, but we were actually able to really rethink all processes for the digital age, and especially for the mobile age. And that really allows us, on the one hand, to offer the best digital and especially best mobile user experience to our customers. And on the other hand, we can also offer that at a better price. Why is that? Because obviously we have a totally different cost structure in the background. So basically we don't have an expensive branch network. We don't have legacy IT systems that are super costly to maintain. And we can just pass on those cost savings to our customers as well. And when I say best digital and especially best mobile user experience, what does that mean? So for instance, you can open your account with us, fully digital, fully mobile, anytime, everywhere. So basically you could just do it on the weekend on your couch. You could literally do it right now, and by the end of this talk, you should have your account. And when I say have your account, you don't even have to wait for your physical card anymore, but you will get a digital card right away and can start using it for online shopping or even for offline shopping with Apple Pay or Google Pay. And we also really tried to rethink how people can manage their money and be really on top of their finances. And what we did there is we developed different features. So for instance, we're offering statistics to our customers, how much you spent last month in different categories, also how that developed over time actually. You can set personal budgets for every month for the different categories. So usually during mid of the month, I get a notification that I already spent 90% of my budget for restaurants and bars. Usually happens every month, especially last month. And then we also developed a feature called Spaces, which are basically virtual sub-accounts that you can open with one click, just like a WhatsApp group basically. And with another click, you can share it with friends, you can share it with your partner, you can share it with your roommates, and really use it as a new way of managing your finances together. So you can automatically put aside some money every month to save for your next vacation. You could lay aside your income taxes every month or whatever you want to do with them. So they're also completely customizable. And how then a transaction works in those spaces is not a painful SEPA transaction where you have to input your IBAN, but it's just drag and drop in the app, basically. And that's really how we usually try to think all of our products and how we really try to develop all our products. So even though in the background there might be some pretty complex regulatory processes happening, we always try to make it as smooth and as beautiful as possible for our customers. And yeah, and that's what our customers also really like about our product at the end of the day. So from those 5 beta testers at the end of 2014, a lot of stuff has happened. And the main part of our growth always came from these organic referrals, because it was the first time that people don't just have to use the banking product, because obviously you need to have a bank account somewhere, but actually really like to use the banking product. And they told their friends, told their families about it. And at the beginning, close to 100% of our growth just came from that source, but it's still the vast majority even today. And then over time, we added some other marketing channels on top. We started with a lot of affiliate marketing in the beginning, because obviously with our free account with no fees, we were quite competitive in all those comparison platforms, comparison websites. Then later on, we added performance marketing, so we really tried to be as efficient as possible, paid social, paid search. As one of the fastest growing startups, we always got a lot of PR as well, which has its pros and cons, but we still always tried to use that as a lever for growth for us. Then we're also doing a lot of content marketing, obviously SEO optimized, really educating our current customers, but also potential customers about new trends in the financial service industry. And now we're at a stage, especially in our core markets, where we really need to enter the so-called mass market. So if you will, enter the early majority. And that's why we're also testing some more traditional, above-the-line forms of marketing. So we did first out-of-home campaigns, we did first TV tests, and we've been doing a first sponsorship of a football club in Austria. So sorry, Graz, it's Rapid and not Sturm, even though I'm a Sturm fan to get some sympathies. So we're really trying now because we really think that our future growth, especially in our core markets, needs to come from entering this mass market. And it's a super interesting times for us as a company. And yeah, how those customers split up is basically to 24 markets in Europe. We have 6 offices in Europe, 1 office in Sao Paulo, where the team is currently preparing our launch in the Brazilian market. More than 1,500 employees. And one really of the coolest things working at N26 is how diverse and international our people are. So you always have those diverse opinions in all the discussions, because with more than 80 nationalities, it's actually pretty crazy. And yeah, even though our headquarters is in Germany and we're a German company, we have just really close ties to Austria. Both our founders are Austrian. We have launched in Austria as our first market together with Germany. And we also have an office in Vienna since 2019. And we're also attracting a lot of international talent to Austria, what we are super happy about as well. But obviously, banking is a heavily regulated industry. It's basically spanning to 24 markets. It's not as straightforward as might be sometimes in classical e-commerce businesses or online SaaS businesses. And operating in a super highly regulated industry has its pros and cons. It's a cure and blessing at the same time. On the one hand, yes, it is complex, and yes, sometimes it also slows you down. Nevertheless, it also creates entry barriers for competitors, because you cannot just fund a bank tomorrow. And how we were trying to approach that at the beginning is that in Germany we had a partner bank at the beginning. So that basically means that the core banking processes and services were coming from the partner bank, and we just put our layer, basically our front end on top. That works, but you're still missing the flexibility sometimes, because you're still relying on the traditional core banking processes. So we decided to get our own banking license, and a bit more than a year after our launch, in 2016, we were actually able to obtain a full European banking license in Germany, which was and is still one of the most important milestones that we had in our company history. And then in the European Union, you can actually take your banking license in one market, in one member state, and also use it in all the other member states. That's called passporting. So in theory, banking market in the European Union is harmonized. In practice, it's not always like that. So for instance, you then cannot offer local IBANs in some markets, which in theory, again, shouldn't matter because not accepting or discriminating against other European IBANs is actually legal. But nevertheless, we still see it happening, especially in southern European markets. And that's why we decided to get a local IBAN in Spain and Italy, for instance, which then means that you need to open up a local regulatory branch there. It's not a physical one, but a regulatory one, which then, again, really increases your regulatory efforts, your reporting efforts. So even though in theory everything should be harmonized by now, we're not there yet, unfortunately, as the European Union. And then there's always the special case of Switzerland, not part of the European Union, so we can only offer our product cross-border there, so our German product, which has some implications. So for instance, we cannot have a physical presence there, or we cannot pretend in any way that we are a Swiss bank, and the Swiss regulator is also pretty strict about that. And then for the Brazilian market, we decided to go with our own license right away to have this bigger flexibility right from the beginning. And we were also actually already able to obtain a FinTech banking license there, which also allows us to offer quite a broad range product portfolio, but with a more limited risk exposure at the end of the day. So yeah, definitely has its curse and blessings. And also often get the question, how do we actually make money? Because our standard account is completely free, so how can you actually be profitable at some point? And even though we have a lot of different revenue streams, to simplify a bit, it's two big ones. It's on the one hand the so-called interchange fee, which is a super small fee the merchant pays every time you're using your card. And that again gets divided into the issue of the card, to MasterCard in our case, and the issuing bank, so N26 in our case. It's a super small margin business, and actually due to the different cost structure, it's not really profitable for a traditional bank at all. But for us, as we're having a totally different cost structure in the background, we can actually only be profitable based on that small fee. So that's why we're also profitable with our completely free standard account already on a per customer basis. And then second largest revenue stream, our subscription product, so N26 Smart, U, and Metal, where you then get an even broader product portfolio. You get also more traditional services, for instance, like travel insurance, phone insurance, or unlimited ATM withdrawals, for instance, worldwide. And I think due to our business model, we're also less reliant on interest rates compared to traditional banks. And that's what's super important, especially now in this low interest environment that we're still in, even though the ECB today announced that they will increase the interest rate in July. And that's also what really our investors like about us. So in total, we raised $1.7 billion so far. In our last funding round, end of last year, we had a valuation of $9 billion, which puts us on a level to one of the biggest, traditional European banks, such as the Commerzbank in Germany, for instance. And if you look at our investors over time, at the beginning they were coming mostly from the European space, so even the German-speaking area. So in our seed round, it was Early Bird Ventures, so German early stage fund. It was Red Alpine, a Swiss early stage fund. But then with the Series A, already the first US fund came in with Ala Ventures. And then if you look a bit further, actually from the Series D, it's only US and Asian funds anymore, because unfortunately for those big pre-IPO rounds, there are no European funds anymore that can lead and back those big funding rounds, which is on the one hand a pity, I think, for us, for Europe, because we're missing out on a lot of opportunities here. On the other hand, for us as a company, it also brought in a lot of expertise and international exposure for us. Yeah, but I think an evaluation is always just a means to an end at the end of the day. And our vision is really to build this first global banking brand. So because traditionally banks were, especially retail banks, were only operating in one market, then maybe expanding to one or two neighboring countries. But no one was really trying yet to build this first global brand, as we have it in many other industries. You know, if you will, the Spotify for banking or the Uber for banking, and that's what we're really trying to build over the next couple of years, and then hopefully at some point serve 100 million customers worldwide, and hopefully serve 100 million happy customers worldwide at some day. Cool, thanks a lot. That was it from my side. So I think we're having some questions now.
We are, yes. And then we're prepping for a grand finale that you're all going to love. But let's start with some questions right over here. We have our first question for Christian.
Hello, Christian. Thank you very much for your talk. You mentioned that N26 was founded in Vienna by Austrian founders, yet you moved your headquarters to Berlin. Can you maybe elaborate more on the decision and why Germany was elected, and also elaborate more on the specific factors within the Austrian framework that made it difficult or almost impossible to continue as an Austrian company?
Yeah, thanks for the question, actually. I mean, our founders are Austrian, so the idea was born in Austria, but then Valentin and Max, our founders, decided to fund the company in Germany. And I think it's obviously because I think Berlin especially, and then Germany as a whole, was just way further as a startup city and startup environment. So I think it was mostly two reasons back then. On the one hand, the availability of funding in Berlin compared to Austria. So in Austria, back then, there was not even one venture capital fund. Now there are a couple, unfortunately. But back then, Berlin was just way further down the road when it comes to funding. But on the other hand, it was also availability of tech talent. So in Berlin, there were already a lot of tech companies operating that already attracted a lot of tech talent to the city. And so the availability of tech talent back then was just way better in Berlin as well. But I think fortunately over the last couple of years, Vienna basically was trying to basically really become better there. And I think we're not there yet, so we're not Berlin yet, or we're not London yet. But still, that was also the reason why we decided to open the office in 2019 in Vienna as well. We actually saw some improvements in the environment, and we actually are able to attract good local talent now, but also good talent from, let's say, Eastern European countries, but also attract really good international talent, and often also more senior talent that for them Berlin might be a bit too hip to actually move there with the whole family, but they decided then to move to Vienna because of the quality of living that we have here. So I think we have some positive sides as well, but I think nevertheless when it comes to the whole regulatory environment, there's still some improvements to be made in the future.
Other questions? Yes, right here, please, in the middle.
So you just mentioned London, and I also noticed on the map that the UK was conspicuously absent. I think I remember that you launched there, but then retreated. Could you shed a bit more light on that?
Yeah. So basically, we launched in the UK, basically passporting our European banking license back then, and then unfortunately the UK decided to leave the European Union. We basically had to decide whether we're going to apply for an own license in the UK or exit the market. And to be quite frank here, I mean, obviously, UK is a highly competitive market in the new banking space with Revolut, Monzo, and the likes. So it was, at the end of the day, not worth it to push that much money and effort in it of getting an own UK license. That's hard to get, difficult to obtain, also costly to maintain. And so we decided to focus again on our European core markets in the European Union. And unfortunately, we had to exit the market back then.
Yes, we have a question right over here. Please.
Thank you. I have a very marketing question, because coming from 3 years from Jungformat, working for Erste Bank und Sparkasse, what is your biggest challenge concerning traditional banks? Because I have an N26 account, but I only use it for small things. I would never like transfer my salary there because I have the fear of security somehow. It's like a very conservative way probably to think about it, very Austrian. So how do you deal with that? You were talking about ATL campaigns and all of that, and I mean Erste Bank und Sparkasse is one of the biggest spenders in Austria. Is that really also a thing why you did that, going into TV and out of home and all of that?
It's one of the reasons actually. So, but I think in general, banking, you trust your money, your bank. So it's, trust is one of the most important topics in banking in general. And yes, we have a full banking license. We have the deposit guarantees of up to 100,000 as all the other traditional banks. And yes, we try to really bring that across. But nevertheless, I think actually for us, it's not really such an issue if you don't have your salary with us. In this low interest environment that we are in, deposits are anyway not very profitable for a bank at the moment. So for us, from a business case perspective, it's totally fine if you use us as your basically secondary spending account and use us for your daily, transactions, bars, restaurants, vacations, whatever. That actually is totally fine for us. And so that's how we often see that people start using us. First, maybe using us as their, account for traveling because you don't have to pay fees abroad. Then start using us as the secondary spending account. And at some point, then trusting us enough, if you will, to also move your whole salary to us. But that's totally fine for us, actually.
We have another question right over here, please.
I would like to ask you about the learnings of two situations that you encountered in the last months. One was the, I would say, the compliance stuff, especially in Germany. So what did you learn from there? And also, because we already heard from the UK, but also the getting out of the market from the US and closing the office in New York. What were the, not really the reasons, but what were your learnings from that?
Yeah, well, two big topics. On the first one, on the compliance one, I think, as a bank in general, during the pandemic, the whole online frauds was just, exploding, if you will. So it's really a challenge for all the banks out there. And also especially for us as a fast-growing digital bank, it's even more an issue, of course. And we really, basically trying three things there. So we're investing a lot of, basically hiring new staff there. We're currently rethinking our process in that space. And what we're also trying is really develop new products, new features in that area, so that are based on AI, so that we're really becoming, a forerunner in that space as well. So not only relying on the more, let's say, traditional compliance process that we also have and also need, but also like really setting us up for success for the future, using new technologies as well in that area. To the second question, the exit of the US market. At some point, the launch in the US was actually quite successful, so we were super fast at like 500,000 of customers. But then at some point, we really realized if you really want to be like successful in the market in the long term, we would need to invest just more there. And that means not only money, that was fine back then in terms of funding, but also in people. So we would have needed to move teams from Europe to the US, actually really focusing on the US market. And at some point, it was just a decision of priorities, and we still saw like that much potential in the European markets, in our core markets, that we want to further develop before potentially re-entering the US or other larger markets than back then.
Outstanding. Christian, thank you so much. One round of applause one more time. An illuminating presentation. Thank you very much.